Hi there and good morning. Holly Shields here reporting live from Kalkine Studio in Sydney, and you're watching the opening bell. While the Wall Street rally and charged up commodities space a significant tailwinds, the market is also keenly eyeing the potential dominance of the virus concerns and Greater Sydney and Darwin's lockdown impacts as potential headwinds. Well, the virus spread is definitely something to worry about, as Australia reported on Sunday one of the highest numbers for locally acquired coronavirus cases this year, triggering lockdowns in the cities of Sydney and Darwin, as well as forcing tighter restrictions in 4 states. Sydney began a 2-week lockdown on Sunday as the Bondi neighbourhood cluster of the highly infectious coronavirus Delta variant rose to an unnerving 110 in Australia's largest city. An outbreak in the northern city of Darwin prompted a hard 2-day stay-at-home order as well. And on that note, let's cast an eye over how the Australian market charter is panning out today. Defying strong commodity prices, the ASX 200 edged lower during early trades amid growing virus concerns. The bottom performing stocks in this index are Gold Road Resources and Qantas Airways. Then, shares of Australian travel agency companies Flight Centre Travel Group and Webjet Limited dipped as virus woes amplified. Sydney Airport Holdings also slid, unsurprisingly. And IT players Xero, Afterpay and Zipco traded in red amid the overall rout. On the other hand, e-commerce giant Kogan and global online marketplace Redbubble rose amid lockdown measures, bolstering the business prospects. Meanwhile, last week Friday, the Australian benchmark index rebounded from lower levels and closed the session 0.45% higher at 7,308. Before we jump into the ASX charter in detail, let's have a look at the last US market performance. On Friday, Wall Street registered a market-wide rally, with the S&P 500 closing at a record high, up 2.7% on a weekly basis. The news that US President Joe Biden had successfully secured a bipartisan infrastructure agreement with lawmakers and weaker than expected inflation data underpinned the rally in equities. Notably, Biden's infrastructure plan is valued at around $1.2 trillion over the period of 8 years, $579 billion of which is in new spending. Meanwhile, the latest US personal consumption expenditures, or PCE, revealed that a measure of underlying inflation rose less than expected in May. Core PCE surged 3.4% on a year-on-year basis, comfortably leading the Fed's flexible target of 2%. And while the Dow Jones surged on 0.71% to close at 34,438.58 points, while the S&P 500 was up 0.34%. On the other hand, Nasdaq was slightly negative with a downstick of 0.06% to 14,360.39 after making a new high in the session before. The financial sector was the session's best performer after the Federal Reserve eased pandemic-era restrictions that required lenders to retain a substantial buffer of capital against a severe recession. Lenders will be therefore well positioned to return to more capital to investors in the forms of dividends and share buybacks. Meanwhile, the benchmark 10-year US Treasury yield rose above 1.50% on Friday to close out a week with the largest weekly gains since March this year. The yield curve steepened slightly with the spread between 5 and 30-year Treasury yields, increasing to 123.80 basis points from 118.60 the day before. The spread between 10-year and 30-year Treasury yields also had its biggest weekly gain since August of last year. And now moving on to the currency space, the US dollar ended Friday's session almost unchanged, recovering from an early fall after tamer than expected producer price inflation data was released. The investors continued to evaluate whether the US Fed will act sooner to curb inflation if it persists. The dollar index closed unchanged at 91.838 after falling to 91.528. On the other hand, Australia and New Zealand dollars were up for a fifth straight session and recorded solid weekly gains. While the crypto space also deserves some attention on that note, Britain has banned Binance's UK openings in the latest cryptocurrency crackdown. The UK's financial regulator has said Binance, that is one of the world's largest crypto exchanges, cannot conduct any regulated activity and issued a warning to consumers about the platform, which is coming under growing scrutiny globally. Meanwhile, Tesla is under the spotlight again, but this time not for the right reasons. The company is recalling vehicles in China for an online software update. Chinese regulators said on Saturday that Tesla would recall nearly 300,000 China-made and imported Model 3 and Model Y cars for an online software update related to assisted driving, with owners not required to return their vehicles. Now, on that note, let's take a glimpse at the US market performance. But before that, the major newsmakers in the Australian share market. Time for a small break.
Hi, this is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back, this is Holly live from Kalkine Studio and you're watching The Opening Bell. Before the break, we took a glimpse at the US market performance. And just like that, it is time to cast an eye at the major newsmakers in our share market. The first big news comes to us from Metcash, which jumped on increasing its dividend following a strong increase in revenue and earnings during the 2021 financial year. For those who don't know, Metcash is Australia's leading wholesale distribution and marketing company with a diversified business across food, groceries, hardware and liquor sectors. The group's underlying EBIT increased roughly 20% to $401 million, with strong volume growth and improved leverage in all pillars. The group has thereby announced a 40% increase in dividends to 17.5 cents a share after declaring a final dividend of 9.5 cents. Not to mention, Metcash has increased its ownership stake in Total Tools from 70% to 85% for an acquisition cost of $59.4 million. The group has also increased its debt facility to Total Tools from $40 million to $65. Metcash said it continues to have a pathway to full ownership of Total Tools towards the end of FY24, with put and call arrangements in place. The next newsmaker worth looking at is Split Payments, who skyrocketed on partnering with a leading Middle Eastern BNPL provider called Tabby. Split, the company empowering consumers to use their existing line of credit to pay in installments, announced that it had signed a new partnership with the leading Middle Eastern buy now, pay later solution provider Tabby. Notably, Tabby will integrate Split's installment payment platform through a white label solution to allow its merchants to offer installments on credit cards. The integration of Split will also allow Tabby to expand its offering to new merchant categories, such as those with higher than average order values. And wealth manager Perpetual Limited soared on the management update. As per its latest update, Perpetual has appointed New York-based Mona Kanan, the managing partner of private equity firm K6 Investments and a former CEO of Procter Investments Managers, as an independent director. Meanwhile, Gold Road Resources dipped on a production hit. The company said that it expected the gold production from its Gruyere mine to be the lower than expected end because of disruptions to the processing plant at the site. Consequently, production at the operations for the June quarter will be approximately 52,000 to 55,000 ounces. Additionally, all-in sustaining costs for the period are anticipated to be in the range of $1,675 to $1,800 an ounce due to the lower than expected gold production and additional plant maintenance. And on to the next major newsmaker under the spotlight today. Nanosonics soared on announcing its plans to launch a new infection prevention digital product platform. The platform Nanosonics Audit Pro is being developed for traceability, reporting and compliance. A national rollout across the US is anticipated to commence from July of 2021. Nanosonics is an Australian infection prevention company that has successfully developed a unique automated disinfection technology. Nanosonics Audit Pro is the result of a number of years in research and development and opens up a significant opportunity to market a unique solution that provides a digital workflow compliance management system for tracking various instruments used in medical procedures. But before I move on to the next trending updates, it's time for another small break.
Crypto Talk by Kalkine. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by Kalkine.
Hello and welcome back. This is Holly live from Kalkine Studio and you're watching The Opening Bell. Let's now have a glance through the ASX sectoral charter. Well, Australian energy majors such as Woodside Petroleum, Santos and Oil Search are trading in the green after crude oil prices rose for a fifth consecutive week. On Friday, crude oil prices reached their highest since October 2018 on expectations that demand growth will outstrip supply, and after the OPEC decision to be cautious in supplying more crude oil to the market from August of this year. Brent crude futures rose to 0.8%, close to the $76 US a barrel, while US West Texas Intermediate crude oil was up 1% to 74 US dollars. And moving on now to the miners space, heavyweight miners BHP Group and Fortescue Metals are trading in the green amid Chinese coke and coal, both marking an uptick. Last week, we even saw Chinese coke futures surging to the 9-year highs. On Friday, Chinese steel and iron ore futures inched up, while coke and coking coal both were around 5% up on the back of solid demand at the mills and supply tightness. The most traded iron ore futures for September delivery on the Dalian Commodity Exchange rose to 1,171.5 yuan a ton, compared to the previous 1,170.5 the day before. And besides, copper prices held the ground after US President Joe Biden embraced a bipartisan Senate infrastructure deal valued at $1.2 trillion, helping to reinforce expectations of the robust demand. Prices of copper were up around 5% last week. And on that note, ASX listed copper players Oz Minerals and Sandfire Resources traded in the red during the early trading hours today. Then in the yellow metal space, Newcrest Mining, Ramelius, Evolution Mining and Northern Star Resources are inching lower despite gold price upticks. On Friday, gold edged higher after the stagnant US consumer spending tempered bets for the Fed's early monetary policy tightening, setting the yellow metal on track for the first weekly gain in the last 4 weeks. Well, that is just about all for now. We'll be bringing you more stock updates in our upcoming shows. Stay tuned for more live market updates on Kalkine TV across economies, markets and sectors. Holly Shields signing off.